And welcome everybody to another Smart Money Circle interview. With me today is a very special guest, Tom Cruz, who is CEO of Section8Formula.com. And Tom has a specialty in investing in real estate, providing cash flow, and specifically with Section 8 real estate. So Tom, the floor is yours. Welcome. I always
Thank
like
you.
to begin by asking, can you tell us a little about your background and how you got started in the business, please?
Sure. I'm originally from Rio de Janeiro, Brazil. I've lived here for the last 26 years. I went to the University of North Carolina at Wilmington, and I studied finance and computer science, graduated and got into wholesaling real estate, and then eventually started to buy real estate and some of that cash flow that I was generating from that. Always been into entrepreneurship ever since high school, and real estate was just kind of the vehicle that I chose to kind of build wealth with.
Very nice. So can you specific for people that aren't familiar, how did you get involved with Section 8? What is it? How do you make money from it? So how's it different from other real estate, so on and so forth, please?
Yeah, so Section 8 is simply a program provided by the federal government to help low-income people at or below the poverty line get into safe, affordable housing. They will actually pay up to 100% of the rent directly to the landlord, and that's direct deposited directly into your account. I got into it completely by accident. I think I had like 10 or 15 units when I got into Section 8. I bought a property. It was $55,000 property. It was rented for $13.50 per month, which was obviously a home run. And the day after I bought it, the owner was like, "Oh, we need to switch you over to direct deposit with Section 8. He never told me it was Section 8 when I was buying it. So I kind of got thrown into the deep end, figured out how to do inspections, figured out how to manage and screen tenants, in the future with additional Section 8. But once I started seeing, those direct deposits coming in at the beginning of every month, that was the light bulb moment. I no longer had to chase tenants. I no longer had to deal with any of the rents. It was just automatically deposited. And the only thing I had to worry about was passing the annual inspection, which is pretty straightforward.
Love it. And what kind of returns have you seen or do you see in Section 8 versus other housing?
Yeah, so Section 8 pays above market rent. Fair market rent, for example, because they don't care about the price of the property. So for example, if you went out and bought a $60,000 property in Wilmington, North Carolina, you're not going to get a tenant that's going to pay $1,400 a month for it. It's just not going to be in the best location. It's not going to have the best finishes. There's no granite. There's no, let's be honest, no stainless steel appliances. Right. There's no tile floors. It's going to be, bare bones, basic. As long as it's clean and, safe, Section 8 will approve it. And they're paying based on the bedroom count. So 2, 3, 4 bedrooms are ideal, and they're paying based on that. So you can get the arbitrage is the key there. You buy a $60,000 property that's move-in ready, which is all over the place in Akron, Ohio, Toledo, Ohio, Dayton, Ohio, and then you rent it for $1,200 per month. You have a $350 mortgage, a couple $100 in maintenance, management, vacancies, and taxes, and you're cash flowing minimum $500 per month per unit on a unit that you only put 12 grand down on in order to get into it.
Yeah, that's great. So from a, I guess, investment standpoint, you said you have a total of 500 units now?
Yeah, 504 units in 4 states. I invest in North Carolina, South Carolina, Tennessee, and Ohio. Any
specific reason why you focus on those and not other areas of the country?
Proximity. It was close to me. I'm in Myrtle Beach, so that's an hour from me. Most of my holdings are in Wilmington, North Carolina. Ohio is really the furthest that I've gone just because the market is so good there. I mean, there's multiple cities there where you can go look on realtor.com or Zillow, and I mean, 60, 70, $80,000 units that are move-in ready that you can Section 8 the day of closing, and it just makes sense.
And how does it work, the Section 8? Do you have to apply to the Section 8 for the government, or the units when you buy them, they're already under Section 8, or how does that work?
It could be either one. 9 times out of 10, the units are vacant. That's why I prefer it, because I can screen the tenants myself. And that's where most landlords will fail, is they assume because the rent is guaranteed, the tenant quality is guaranteed, and it's not. You could very well have somebody that just got out of jail for manufacturing and selling drugs, and now they're going to be living in your house, probably doing the same thing. So it's really important to do the same type of screening as you would do with any other private tenant. The only difference is their payment method. Private tenants can be paying you with a check. Section 8 tenants paying you with direct deposit from Uncle Sam. And yeah, you go to the local housing authority, you sign up for Section 8 landlord, they will accept you into the program. And then from that point, when you have an address that's available for inspection, you call it in, just like a building inspection. They come out, look at it, make sure it's all good, and the tenant's able to move in.
Nice. And then next question is, how do you handle risk? And what what mistakes do you see with respect to risk management other people make?
Kind of like I just described. I mean, the tenant selection is the biggest thing. The housing is straightforward, man. I mean, there's $70,000 houses, they're 1,000 square feet. The probability of you buying something that requires tens of thousands of dollars in repairs is so low. And obviously you can get an inspection before you close on it. So the property risk is low. The highest risk is people just not doing aggressive screening. We check background, we check credit, we check eviction history, we check employment references, we check landlord references, and we even have our property manager go to the tenant's existing property and see how they're living there. So we're very thorough about it. So it allows us to have good long-term tenants that aren't constantly turning over. Also location. I mean, just because you can find cheap places in like these crime infested areas, Section 8 tenants are still, people, they don't want to live in places where there's going to be a stray bullet coming through their wall. So you have to buy in places that are also decent. The crappier the area, the higher the turnover, tenants aren't going to stay, and you're just going to draw just, the worst of the worst tenants. So I would say those are kind of the big things as far as risk.
Okay, makes sense. And then what mistake, I mean, I guess from the mistake standpoint, people just don't do their due diligence with respect to, looking at the tenant's background?
Yeah. So what happens is this: somebody will buy a property, their first Section 8 unit, and now they have this $400 mortgage where they may have not had a mortgage at all, or they're still renting and they're not really used to it.
Yeah.
And then the first person comes by and they're like, "Hey, man, I have $2,000 security deposit. I have, first and last month's rent. Here's a cash. All this like money. Let me move in. I have, all this sob story. My whatever just got out of jail. I got to do this. Like I'm about to be homeless. Like, can I move in?" And then you're like, "Oh my God, like $2,000, $3,000, $4,000 cash. Like, this is great." Then they move in. You didn't check them out at all, or you might have just done, some basic reference checks, but you really didn't check anything on their background or eviction or who these people are. And that's where it happens, is people get anxious over placing their first tenant. And a lot of times they'll just place whoever comes by first. And those are always the worst tenants.
Got it. So Tom, talk to me a little about your following. I know you have over 1 million followers online. How did you grow that? What services do you provide? All that fun stuff, please.
Yeah. So I have a pretty big following on TikTok. I have about almost 900,000 on TikTok, and I think another 50,000 on Instagram, and then some on Twitter and Facebook. But for the most part, I just talk about real estate, getting into real estate. I'm also really into cars, so I have some, car content in there as well. And then I also have, sorry, I just got a call through my message. And then I also have content about entrepreneurship. So that's mostly what my social media is about, and that's at Cruz NC. It's on TikTok and Instagram. Got it.
Okay, great. So, and you have a Discord too, correct?
I do have a Discord. That's actually part of my Section 8 course, which you can find at section8formula.com. It's a $5,000 course and coaching program that walks you through buying your first property and making sure you underwrite it correctly, make sure you get the right financing, make sure that you select the right tenants. That's all included in that course.
Got it. Okay, great. What about leadership? You have a team that works with you, and how do you handle leadership from a structural standpoint?
Yeah, so locally I have 4 full-time property managers that deal with my properties here. And then I have 1 property management company in Tennessee because I don't have that many units there. So it doesn't really make sense to have a full-time person. Yeah. And then in Ohio and South Carolina, I do the same thing. So I just check in with them once a week. I empower them to be able to make decisions. Normally under $1,000, they can make decisions on their own. Mm-hmm. Anything over that, roofs or major repairs and expenses, I go through with it, once a week with them. But for the most part, it's as passive as it can get. I mean, the difficult part is finding the people, setting up the systems, and making sure it runs smoothly. But once you get that done, I mean, real estate can really be passive, especially if you're not constantly dealing with tenants leaving, constantly not dealing with turnovers, and constantly not dealing with, bad properties. So
what happens in that situation if the tenant wants to leave? If you did your due diligence, you find the tenant that comes in, you think they're good, they stay with you for a while, and then eventually they're going to want to move. What do you do there? Just find another one?
Yeah, we'll just reoccupy it. I mean, if they want to leave, then what we'll do is we'll terminate their lease. If they're already month to month, then it's normally a lot easier because then we can just release them and give them their deposit back if the unit's in good shape. If not, we'll just withhold it and repair the unit. Right. The demand for Section 8 in most cities in the country is 2 or 3 years. I mean, you're waiting, if you're a Section 8 tenant, years to get a voucher to be able to go and get free housing. It's not like anybody that wants it can get it. So the demand is insane. I mean, if we post a property right now today, by Friday, I would say by tomorrow, we probably have 10 to 15 applications. Oh, that's so just strong. Yeah, at least locally here. And I mean, we're seeing that in all the other municipalities that we're working in as well. But I mean, in some places even crazier. I mean, if you're doing this in LA or if you're doing this in, Boston or Miami, you're going to get hundreds of applications because it's just so much demand.
Got it. And then what about other cities? I know that you said mostly you're in smaller cities. Have you ever
Right.
looked to expand into larger cities?
No, because the bigger the city, the more the headache. Like in New York, you're gonna have, or Los Angeles or Miami or Charlotte.
Yeah.
The prices are all super inflated. They're major metropolitan areas. Everybody wants to be there. You're not buying houses for 70 grand move-in ready. You're not even buying a trailer for that in most of these other towns. So it never really makes sense. Yes, the rent is higher, but if you have to spend 50 to 100,000 on a down payment for a Section 8 house, it doesn't make sense. It's never going to cash flow. The risk is so much higher. I wouldn't want to have the risk of a Section 8 tenant or any tenant in a $200,000 to $300,000 house in Los Angeles, just because it's making $2,000 or $3,000 a month. So for me, it never made sense. It's so much more cash flowable in these smaller towns or mid-sized towns that have a lot of people that want to move in.
I like the arbitrage concept. I have a book, it's called Psychological Analysis, and it's about trading and investing, but also from how to make smart decisions. And in
Right.
it, I talk about intellectual arbitrage and time arbitrage, because
Yeah.
most traders are in there buying, selling, buying, selling. They don't understand profits are a function of time. That's the stock market or trading currencies or commodities or crypto, whatever. But the other side is intellectual arbitrage, and it sounds exactly like what you're doing, where your job is not just to outsmart the market, but outsmart your former self and your competition. So
Oh yeah.
I love that arbitrage concept. So speak of that a little bit. What about from the smaller cities? What's the smallest city you would go look at? What's your sweet spot? Where is the arbitrage lie in your experience?
Right now, the smallest city is probably Dayton, Ohio. I have, I believe, 12 units there right now. The reason I like that is, again, the condition of the properties and the locations are really strong, because you can go into a market and find cheap properties, but they're all tear downs, or they're all you're flipping, or they're really good just for wholesaling, and you can flip the contract to a flipper or landlord. I prefer the smaller mid-sized cities. 50, 100, 150,000 population is kind of the range that I see a lot of. In Wilmington, we have 100,000 here. I think Dayton is in that similar range. And then I'm also in Akron. That's a pretty small town. All those places have fair market rents between $1,100 and $1,300 a month, and you can comfortably buy units for under 100,000 that are move-in ready. That's the big criteria. That's really the only arbitrage, because with Section 8, they have to pay more. They have to pay more than market rent, because think about it. If you're a landlord and you can get $1,000 a month for a property with no inspections, no overhead, no documentation, no nothing, or you can go and have to do Section 8 for $1,000 a month, you're going to probably choose the non-Section 8 option.
Right.
So they incentivize landlords like crazy. They have incentive bonuses. They, will give incentives, on move-ins. So sometimes they'll even pay part of the security deposit. So a lot of times they want you to accept vouchers, because if not, then these tenants don't have anywhere to move in. So we're finding much higher rents.
So we know the three most important words in real estate are location, location, and location. And you mentioned
Right.
So with respect to the inside these cities, so you look for these smaller cities, not too
Right.
small, but a nice size city.
Right.
What do you look for from a location standpoint, where you just say, yes, this is it, or no, I'm not doing it?
I like older neighborhoods, older starter neighborhoods, where you have like these brick ranch houses, or you have, just like newer 1980s and newer, I would say, like vinyl sided houses. I look for good roofs. I look for good bones, good roof, good curb appeal, good siding. HVAC is relatively newer. All the major components that I don't want to have to spend $5,000, $10,000 replacing or repairing in the next 2 or 3 years. I look for that. I check crime maps, make sure there's no major violent crimes happening every day, no drug related crimes every day. A lot of times I just Google local crime maps there and try to get a sense of it. I'll Google the street name. A lot of times if you Google a street name, you'll see, all the news articles about homicides and, terrible things happening there. Obviously avoid that. So I avoid war zones. I really don't like war zones, places where tenants are going to be unhappy, uncomfortable, feeling not safe. And 2 months in, they're going to be like, hey, I didn't know it was like this here. It's like, 4th of July every night. I need to get out of here. So, and that just costs you money.
Got it. Okay, great. And then in your course, can you walk us through that a little bit, what people can expect and what they can get, and some of the value that you provide there?
Yeah, so at section8formula.com, I have a course that's 7 video modules that walks you through the entire process, from finding the best markets, like I just described, finding the best properties, getting financed. I have 3 hard money and private lenders in the course that are partners that don't require tax returns or income verification. It's a no-doc loan. They also do, I also walk you through getting onboarded with Section 8, how to screen tenants correctly, how to onboard tenants correctly into your property, and then also scaling, how to get from 1 unit to 100 units to 300 units and however many you want. I talk a lot about other people's money, how to set up those LLCs, how to set up those operating agreements with your partners or equity partners, or if you want to do syndication, I talk a little bit about that as well. So that's all included in that. I have a monthly Zoom call, so you'll be able to speak with me and my team on a monthly level. And then I also have a Discord as part of the course where you can ask us questions every day. Or if you want to buy a property and you want us to look at it, we'll look at it for you as well.
I love that. So let me ask you this question. Scaling. So in my business with money management, it's the same concept where people have obstacles scaling. How do you handle scaling, and how do you go from 1 unit to 500 units? And where do you see people kind of hit a wall, plateau, and then just either break through that wall or not break through it?
It breaks at 10 units because that's how much Fannie Mae and Freddie Mac will lend to you personally before you're capped out. And then people either don't want to really explore portfolio loans. They don't want to take the risk with commercial loans because they see 5 and 10-year balloons and they get scared of that. And then also the biggest barrier is other people's money. Yeah. You're not going to get to 500 units by yourself unless you're independently wealthy already and you have 5 million sitting in the bank that you can go and deploy. So I found that I hit my wall at around 30 units. At that point, I was, running out of cash, and also just drive to constantly be wholesaling and reinvesting and, self-funding my own deals. Because at some point it gets burnt out. I mean, I was buying a unit a month pretty consistently, and I needed 16, 18 grand to do that. And in order to do that, I need to, continue generating all this other income. So at some point it becomes a lot more difficult. And that's when I should have, started looking at other people's money sooner. And when I say that, I'm talking about networking. I use my LinkedIn a lot. I go to Cars and Coffee. I'm already around some pretty high net worth individuals in that. And if you already have 10, 15, even 5 units, and you've been doing Section 8 on it, and you have a track record, and you have a balance sheet, and you have profit loss statements, and you can say, hey, look, the last 6 months, I've gotten $6,000 a month guaranteed rent. You bring that to any investor that has cash ready and they want to deploy it and don't want to be involved. Yeah. It's a pretty easy sell. I mean, they're going to be on the loan, they're going to be on the title. There's very little risk to them on the real estate side. So I find that works pretty well.
And what kind of returns do these investors get?
Yeah, so cash on cash, we're looking at 50 to 60%. Right now on per unit, that's what we're seeing. I mean, we're buying $60,000 units, putting 12 grand down and getting $1,300 a month pretty consistently. As far as the actual total return, it varies. I mean, we normally double their down payment within 2 or 3 years. And that's kind of what we tell them. Hey, look, if you put $1 million in, we're going to give you $2 million back in the next 36 months. And the way that we do that is through rent roll. I mean, we force appreciation through the rent roll, where if we buy 30 or 40, 50 units that are vacant or that are under rented, we'll either raise the rents or get rid of the problem tenants and then reoccupy with Section 8. So now we have guaranteed rental income, we're getting above average rents, and then we can do a cash out refinance and buy out our investors at the end of that portfolio or at the end of the term. They get their money back and they get the return back, and I retain the properties.
Nice. And then do you get cash flow along the way as the investor? Like,
yeah, no. They get monthly cash flow. I give them 60% of the cash flow every month, and then I'll retain 40% as part of the management. And I mean, that's all part of management fee. And I'm also an equity partner. So we're 50-50 on equity, 60-40 on cash flow split.
Love it. Well, Tom, that's fantastic. Thank you so much. Is there any questions that I didn't ask that you want, or anything that you want to share before we wrap up?
No, that's pretty much it. If you guys are interested in learning more, Section 8, the number 8 formula.com, or you can DM me. I'm very active on TikTok. That's T as in Tom, Cruz, CRUZ, NC, like North Carolina, T Cruz NC. I appreciate you having me on the show.
Love it. Thanks, Tom. Thanks for coming on.
Thank you. No problem.